Hello, I'm Angela Barnes and welcome to Beat the Street on IGTV. Well, we've got quite a show coming up for you, and this is the show that gives you all the tradable news and data ahead of the Wall Street Open. So what have we got? Well, we're starting with August non-farm payrolls, another test for the US dollar, which we'll be bringing to you live, that data as it comes in our special coverage on this show in just a moment. What we've also got for you coming up on the show, Tesla, well, it slashed its prices of its premium Model S and X cars in China hours after unveiling a refreshed version of its Model 3 mass market family saloon. And we've also got coming up on the show, we're going to be keeping across Dell Technologies shares when trading opens as the group seems to have turned the difficult corner that has hit the sector. Well, good afternoon. I am Angela Barnes and welcome to this new edition of Beat the Street. Well, the big focus today, as I said, is on the US jobs report for clues into the strength of the labour market, as well as the Federal Reserve's next monetary policy moves. Well, indicators, perhaps, economists are expecting to see 170,000 job creations in August after 187,000 in July, while the unemployment rate is forecast to stay at 3.5%. So let me just check and see if that data has yet dropped, and it hasn't just yet, but actually, no, having said that, we've got some of it in, it's just landed. So US unemployment rate, it was forecast to be 3.5%, and it's actually come in at 3.8%. Well, now we're looking for US non-farm payrolls for August. And we don't just have that data just yet, but it should be there in a moment. So what we're going to do is I have with me here Richard from US markets for us pre-open. So Richard, if I can just cross over to you and you can just fill us in, please, on how the US markets are looking pre-open. As soon as I get that non-farm payrolls data for August, I'll let you know, and then we can see how things change. So Richard, over to you.
Yeah, so, looking at the S&P 500 ahead of the market open, we've seen a slight move lower yesterday. Now, of course, we've got the non-farm payroll data that's just come across. I'm seeing 187,000 jobs have been added in August. That's obviously higher than that 170,000 K print. And that essentially flies against what we've been expecting. It's not a beat to the upside that should cause any sort of mass market instability, if you like. It's more or less within that reasonable range. But as I mentioned, it's sort of gone against what we had seen in the build-up. So going back to your US equities, equities largely been pairing these gains that we've seen ever since we've seen that much deeper pullback that we've witnessed throughout this longer-term bull trend. And ahead of the open, we'll be watching this with great interest, but a higher non-farm payroll print, but unemployment moving up 3.8% there. So the Fed will certainly like to see that, but we'll still be wanting to see jobs month on month heading lower.
So Richard, yeah, I mean, that's quite astonishing because as you said there, that we were expecting a figure of about 170,000. And so coming in at 187,000 in August, a lot higher. So you touched on it there, but what does this mean now? Like, what does this mean now for the Federal Reserve's next steps? And, does it change what Jerome Powell was saying at the Jackson Symposium last week, higher rates for longer?
I don't think it changes all that much, to be honest. He's been going on about both US growth and the labor market. And we're still not seeing that labor market really filtering through. Of course, the unemployment rate ticking higher, that's often just a matter of the calculations and around the ever-changing workforce dynamics. But we're still seeing non-farm payrolls printing. Although we're seeing that trend lower, we're still seeing higher prints there. So I think the Fed will certainly welcome the higher unemployment rate, but we still need a lot more to come, particularly from US growth and even more tightening in the labor market. So I think they're pretty happy to bide their time, to wait for the incoming data, as was mentioned at the prior meeting, and just really just analyze the effect of prior rate hikes and the effect that's having in the real economy.
Okay, Richard. Well, one other thing I just wanted to run by you. We've been keeping across the US dollar, which is set for a weekly loss, putting an end to that 6-week rally. And now all this data has come through. Can you just talk us through what's happening with the US dollar and what implications this latest data might be having on the price?
Yeah, well, if we just look at the 1 minute, I'll just resize the chart here. We've seen the dollar moving slightly lower there. Not too big of a move, but nevertheless seeing that dollar easing off ever so slightly. Non-farm payrolls, we typically do tend to see either a spike lower than a spike higher in the moments thereafter, particularly with this print where we're not really likely to see more of a directional move as far as the Fed's thinking is concerned. So it could just be a momentary period of volatility where markets will probably view this as somewhat of an okay print. It's not really giving the market too much apart from that 3.8% unemployment rate, which on the face of it looks quite interesting, particularly if you're someone sitting at the Fed.
Brilliant. Richard, thank you very much for sharing your insight with us on that. And it's great to have you on the show.
Thank you very much.
Okay, moving on now to other economic data to look out for today. Well, at 3 p.m., the ISM manufacturing PMI data is due. It's seen as rising to 47 in August from 46.4 in July. That would be a 10th straight month of contraction. And also, we've got Canada's GDP preview. Now, let me just see if we've got those breaking news figures here for you, which will have just come in also. Yes, we do. So GDP growth rate annualized for Q2 was forecast 1.2%, but it's actually down 0.2%. So a revised 2.6% GDP growth rate quarter over quarter, forecast 0.3%, actual down 0%, revision of 0.6%. Well, the Canadian economy was expected to have expanded 0.3%, as I said there, in the April-June period, showing slowing from the 0.8% recorded in the first quarter. So moving on now to other corporate news, and let's bring you up to date on Dell. We're keeping across its stock. And if I just bring up the Dell price chart here, well, okay, well, here you can see, well, the Dell is not an all-session stock on the IG platform, but yesterday's quarterly report deserves to mention it. Saw the 7% market. Another group earnings came in at $1.74 per share, easily beating analyst expectations of $1.14. Revenue was also better than expected, reaching $22.90 billion. Dell's servers and networking division performed well in the April-June quarter, rising 11% to $4.27 billion. And that was driven by higher demand for AI-optimized servers. Well, Dell is optimistic about its future. It sees this trend continuing as it expects big tech companies' investments from them to rise. And Dell now says it sees third quarter revenue between $22.5 billion and $23.5 billion, higher than analyst estimates of $21.67 billion. Well, Dell rose as much as 8% in extended trading, which could push the stock up to an 18-month high. Well, let's move on now to Broadcom. I'm just going to pull up the Broadcom chart here as another stock that released quarterly earnings last night. Broadcom marginally beat earnings and revenue expectations in the fiscal third quarter, but the stock fell 3.4% in after hours trading after forecasting fourth quarter revenue below Wall Street estimates. Broadcom expects current quarter revenue to be around $9.27 billion. Analysts anticipated $9.28 billion. Well, the stock is expected to fall by 2%. A bit harsh, you might say, but it looks like some investors are cashing in after a staggering performance. Okay, well, Broadcom share price as well, I just wanted to note, hit an all-time high during yesterday's session, having more than doubled in the past 12 months. But we'll be keeping across that one as well today. And in other news, let's bring you up to date on Tesla, because it slashed the prices of its premium Model S and X cars in China just hours after unveiling a refresh version of its Model 3 mass market family saloon. Now, the US automaker Model percent to around $96,200, and its entry-level Model X sport utility vehicle, well, it slashed the price by about 18% to around $101,600. This is according to its official website. Well, if we bring up the Tesla price chart here, it's an all-session stock on the IG platform, up about 0.21%. But you can see how its stock has climbed since the start of the year, roughly 120% after a sell-off seen here at the end of September the previous year. So we're also keeping across Tesla to see how that progresses throughout the day. Now, moving on to commodities, and WTI and Brent are set to record weekly gains after 2 weeks of losses. Just going to have a quick look at the US crude price chart to see if that's still the case. Price is still up. It's at nearly 1%. And for Brent, it's also performing quite similarly. So Thursday was another strong session as well for oil prices, and it's looking that way again today. WTI gained another $2. Well, how can we explain that in the context of stalling economy recovery in China and US production levels at its highest as well since February 2020? Well, a Reuters survey height and have raised their 2023 oil price forecast. Brent is expected to average at around $80 to $45 a barrel this year. So far in 2023, it's averaged at about $80.60 per barrel. And tonight, the market will await latest data from Baker Hughes. Well, last Friday, the total rig count declined further by 10, taking the total rig count down to 632, the lowest count since mid-February 2022. And the number of active oil rigs fell by 8 to 512 from 520. So that's all we've got time for today on Beat the Street. Thank you very much for joining us, and please do subscribe to our YouTube channel and keep across our updates on our Instagram account, LinkedIn, Threads, and all those social media platforms. We're on them, so do keep across them and stay tuned, and thank you for watching.